Okay, this is cost of goods sold, or cost of goods manufactured problem. This is extra problem number 3, and this is a little bit harder. So print off the problem, and then I'm going to do it then over here. Yeah. Okay, so what do we know? We start out, now your data is all mixed in, okay? So we know that we need direct materials, work in process, and finished goods. So you want to start out with good size T accounts for these accounts. You know work in process is your big one. You have at least 4 inputs here. You've got a beginning balance, direct materials, direct labor, and then overhead. And I would also do that extra subtotal thing that I do at the end, just because I make a lot of mistakes. So let's go through and check off your numbers as you use them. Our direct material beginning balance. Okay, so this is direct material. Doesn't look like we've got any indirect materials. I don't think so. Okay, so the direct material beginning balance is 16,000. Work in process beginning balance is 34,000. And this is work in process. Finished goods beginning balance is 30,000. So these are the 3 inventory accounts. These are all of our beginning balances. Direct material purchased. I'm going to put a little note here. That's purchased, and this is beginning. Beginning balance purchased was 160,000. What else do we know? Prime cost. Okay, prime cost is direct material and direct labor, so that's 294. So I'm going to put a little note over here for myself. I'm going to say prime. It's going to be direct material and direct labor, and that total is 294, right? Yeah. Okay. Gross profit based on sales is 20%. Well, dandy. Okay, so we've got to worry about that. Cost of goods available for sale. Goods available for sale are 450. So what we know, 450 is available for sale. So that would be. I'm going to put this right here. Goods available for sale would have been 450 right here. That's available for sale. Okay, they're 450,000. What else do we know? Sales are 500,000. So we can start a little income statement here. Just see what we need it for. Sales are, we lost it. Oh, 500,000. 500,000, and they didn't exactly give us cost of goods sold yet. We're going to have to figure that out. Direct labor is 180,000. So I've got, let's see, this is my beginning balance in work in process. We're going to add raw material to it, and my direct labor was 180,000. Okay, so now we know that direct labor is 180. If we go back to our prime cost, this is 180. So direct material issued to production had to be, I'm going to have to, where is it? I'm going to have to use a calculator. So what do we have? We have 294 minus 180. Direct material would have been 114. Okay, so now that we've got this, we can take 114, and we know that that's what came out of here, came out of raw materials, and it went into work in process. So that's pretty good. Okay, we're getting there. So now we know the direct materials, the total here, this is 176, and debits 114, and credits. So 176 minus 114, my ending balance in materials would have been 62. Yeah. Okay. Now, Now, the stupid conversion thing. They told us that gross profit, okay, we got to work backwards here. Gross profit based on sales was, overhead is 40% of conversion costs. So let's see what that is. Conversion cost. Conversion cost is direct labor plus manufacturing overhead and gross, let's see. I lost it already. Overhead and direct labor. Our direct labor is 180,000. Direct labor, and okay, it's the tricky part right here. If this, they told us that overhead was 40% of conversion. So if this is 40%, then this must be 60%, right? Because the whole thing has to equal 100%. So what we can do is we can say that 180,000 equals 0.6, 60% of X. And that would be the total conversion cost. How about if I call it conversion? 60% of conversion. Yeah, so 180 divided by 0.6. 180 divided by 0.6 gives us $300,000. So that would be our conversion cost. So this would be 300,000, which would then we work backwards. That means that 40% of that, or 120,000, would be our overhead. Okay, so back to work in process. I'm going to add overhead in here of 120,000. So now I've got a total of, what do we know here? I got to add it up. So 34 and 114. 34 plus 114 plus 180 plus 120, 448. And then we've got to figure out how much went into finished goods. Well, if goods available for sale were 450 and that's 420, then or 30, then 420 must have come from work in process. Okay? They're like that. So this is 420. Our ending work in process would be 24. Is that right? No, 28. Sorry. 28. And we were also given cost of goods sold. Well, they gave us gross profit, right? They said that sales were 500,000, so that this would be cost of goods sold here, but give us gross profit. Gross profit based on sales. Gross profit is 20% of sales. So 500,000 times 20% gives us gross profit. Our gross profit's $100,000. Tricky problem, huh? So cost of goods sold would have been 400,000. Okay? And cost of goods sold comes out of finished goods. That is cost of goods sold. Is that handy or what? So this is 400,000, and this would be 50,000. My ending balance in inventory. Okay, so we got ending balance is everything right now. We figured it all out. I think we're good. So what's the ending balance in direct materials? For direct materials, it'd be 62,000. And the second one, the ending balance in work in process, is 28. And the ending balance in finished goods is $50,000. Okay,